All right, looks like we are live. Hello, everyone, all of our Sanbase Pro subscribers. Welcome to an exclusive webinar to our paid customers about how to monitor whale behavior and generally track market moving addresses with Sanbase. So this is going to be about a 30 to 45 minute long webinar where we are going to go into 4 separate sets of metrics and how we use them in order to find market moving addresses and in general look for patterns in whale accumulation and whale distribution and how those patterns can affect the price of the coin in the short term, sometimes in the long term as well. So joining me today are two of Santiment's finest, Maxim Balashevich, the founder of Santiment, and also Brian, who is one of the market analysts at Santiment as well. So hello, both of you. Just say a few words so we can make sure that your audio works.
Yes, hello.
Test 1, 2, 3. Great to be here, guys.
Good. All right. So before we get into the actual metrics, I think, Max, do you want to introduce the topics and generally explain the ethos of how we go about, approaching whales and whale behavior on the platform?
Yeah. The introduction, in our opinion, is important because it's good to have the whole context why we're doing in a way what we're doing. I mean, the whole platform and all the tools we're building, they have all of them always for one purpose. It's to make better investment decisions. And as an investor, you have each of us. We basically have a kind of choice of two approaches. One is a fundamental approach, where we try to take a look or measure some fundamentally related data and metrics. And another is technical analysis or chartist. So there are two of them. And people think that actually professional or long-term fund managers, pension funds, okay, but we don't talk about pension funds, they're not in the crypto yet. Professional investors that they fundamental kind of people, but get surprised. Many of them are chartists in a sense that in order to maximize return on the market, you want to be in the trend and you want to live the trend. And fundamental data rarely help you to live the trend and the time band. It's really important. So this alone already should bring you to something not only fundamental. Then, of course, on top of it, the crypto, especially new coins, there is no fundamental data in it. Only after some time it's established, people start using there is a growing amount of fundamental data. But most importantly, we believe and we've seen, and maybe Dina will share a little bit, researches and studies and proofs that it is possible to apply specific models to see changes in the market. And why these changes happen? In our experience, or the reason why we started building the platform, the most direct way to understand where the market is, how it will change, is to see behavior group of people which are impactful for the price. Because there are a group of participants who are moving the prices, and there are those who are actually irrelevant for the prices. They're more like coming at some specific point and they're used by the market, so they're punished. And the specific groups, it's generally one, we can call it whale, but it's not just a whale. It's there are really like big investors and they could enter early or accumulate on the dumps and they leave relatively early. And there is more active part of participants, not yet huge whales, but big enough, which can also move market strongly. And you will see, especially like in the smaller coins compared to Bitcoin as well. And the smaller coins are stronger. They move market a lot. And you really want to find a way, how is it possible to track them and see when this aggregated, impactful stakeholders start accumulating and the moment they're leaving. And keep in mind that the moment they're leaving, yes, the price will be depressed, but it's not the end of the game very often, because they might be leaving for the purpose of realizing 2x, 3x, 5x. You know, if any of us would have 10, 50 million, we don't need to do it 10x anymore. It's even enough, maybe 2x. Yeah. So, but this wealthy whales, they leave in early, they're fine with it. And then the next cycle starts, smaller group pick up, yeah, and they push more. And at the end, actually, it's unfortunately, but this is how it works. As a crowd, retail, who just react to, okay, something is super hyped now. It's a trip to the moon, or now it's the next paradigm, the best fundamental data. They jump, but it's the end. Yeah, so you really don't want to do business in the last group. And we want to see the way, can we connect us or be together with first two, and can we identify when the last group comes into the game. So that's why it's important. And in our opinion, the more we work on it, and the more we try to build like models or spreadsheets, like Brian, or in our data science as a team do research and metrics, which we can see on Sanbase, the more we become convinced this is the way to invest and be part of crypto. But also keep in mind, it's not so simple. It sounds like a theory. We're convinced, and we will keep following up on it. In the practice, you also need some practice and applied practice. But it becomes better and better, at least understanding. And once you see the market dynamic, I believe the actions will follow and they will become better too. So, Dino, now after this holistic introduction.
Indeed, thank you for that.
Yeah.
With that out of the way, let me give you a rundown of exactly what we're going to cover today. So we are going to cover sort of 4 areas of the platform where you can explore how whales behave, and find possible accumulation and distribution patterns. So we're going to cover several of the metrics that we currently offer for pretty much all of the ERC20 coins, including also Ethereum and XRP and Bitcoin as well. We're going to start with whale transaction count, which is the newest metric that we have added to the platform. So this will be the first sort of metric or the type of whale analytics that we offer on the platform that we are going to explore. Then we're going to move into supply distribution. You might know it as holder distribution if you are not new to the platform, but we have recently sort of renamed it in order to make it a bit more simple for people. So we are then going to talk about how you can use supply distribution and look at the behavior of different large groups of addresses and how they interact with the coin over time, especially during the rallies and before the rallies. Then we are going to move into the third sort of maybe somewhat underutilized part of our platform when it comes to whale activity and monitoring whales, which is top transactions. And we're going to go into how you can actually zero in on specific addresses that might be able to move the markets, and then set up alerts for those addresses the next time they do so. So that you can get ahead of the tide, sometimes front run the crowd by copy trading what large addresses are doing, which have in the past historically proven to be fairly effective in how they run the market, right? And then finally, Brian is going to show several of his templates, mainly the supply distribution template that expands on this metric, which we have built with Sandsheets. Then at the end, if we have time, I also want to show a little bit of, go a little bit into our supply held by top non-exchange addresses, which is essentially another sort of addendum to our supply distribution metric, but it focuses primarily or almost exclusively on the highest echelon of non-exchange addresses, or the addresses that we have labeled as not belonging to exchanges, right? So those are the types of metrics, or the actual categories of metrics that we are going to talk about today. So over the course of this webinar, I'm going to be kind of referencing this sort of list of different examples that I have come up with for this webinar. If you're interested in this particular document, let me know, because we're not going to cover all of the examples today. Just let me know in Discord, and I'll be more than happy to share all of the. Obviously, this is not an exhaustive list. It's just the first sort of examples that I was able to find for each metric. If you're interested in figuring out or checking out the entire list, just let me know in Discord in our Sanbase Pro group, and I'll send you a link. All right, so let's start with the first metric. By the way, at the end, we are going to hopefully leave some room for a Q&A session. So if you have any sort of questions about anything that we've covered during the webinar, just write it in chat and we'll get to it at the end. Feel free to write during my exposition so that we can get to it, or Max and Brian can reply to you in stream even while I'm talking, so you don't have to wait until the end of the stream to get the answer, right? All right, with that out of the way, let's start with the first sort of category of metrics that we use to track whale behavior. And this is really very new to our platform. So the metric that you are seeing right now on your screen, hopefully, by the way, Max, just let me know if everyone can see my screen, or in chat, if you can see my screen, just type in yes or plus or something, just to be sure. But okay, if you are seeing the screen, this metric has been introduced to Sanbase maybe about a month and a half ago. We call it whale transaction count, sometimes whale transfer count. The idea of the metric is fairly simple. It basically tracks the number of coin transactions that are transferring more than $100,000 worth of that coin on a daily basis. So the idea of the metric is to try to capture moments in time when there's an elevated amount of whale transfers happening on the blockchain, right? Fairly simple. So we started with that as a general sort of proposition or hypothesis for the metric, and then we looked for patterns in this type of behavior on a variety of different coins. We were trying to figure out how we can use this or what we can deduce from this metric, whether upticks or spikes in this metric seem to coincide with particular points in price action for the coin. And very soon we realized that it does seem to occur quite frequently, as you can see in the case of Mana here, that we see these upticks in the whale transaction count around local price stops. So you can obviously see it here. This sort of starts to pale in comparison with Mana's current run, because Mana is an NFT related coin, so obviously it had a massively successful start of the month. But we start here where you can see the sort of first uptick in whale transfers, earmarking this local top. It happens pretty much around every single local top and before a short-term correction for Mana up until this point in time, right? And then the sort of biggest spike in whale transfers occurs before the inevitable correction. Now, obviously, there are some downsides to this metric, or sort of some drawbacks or obstacles, challenges that we are looking to sort of tackle and solve in the future. The main one is that this metric tracks the sort of very specific amount of money being transferred on the network, which is any transfer that includes more than $100,000 of Mana. So the drawback of the metric is that as the price of the coin increases, a transfer that would not fall into this category 5 days ago might fall into this category now, right? So it doesn't necessarily mean that there are more transfers of that sort, in terms of the amount of Mana coins being transacted on the network. It just means that, as the price of Mana rises, it's obvious that more of these sort of transfers, which previously wouldn't be labeled as whale transactions, are now going to be labeled as whale transactions. So one of the things that we are experimenting with is sort of having a toggle here where you can actually, set up a particular amount that you can track. So maybe instead of $100,000, maybe, as the price of a coin rises, $200,000, $300,000. And obviously, for coins like Bitcoin and Ethereum, $100,000 isn't necessarily a whale transaction, right? So I think for this particular purposes, the whale transfer count as a metric seems to work fairly well for low and mid cap coins, and that's what I'm kind of going to focus my analysis for the time being as far as this metric is concerned. So obviously, there's really no silver bullet as far as, either whale, on-chain, off-chain indicators are considered. So I'm just explaining, what the benefits of the metric are, but also what the innate drawbacks can include, right? So obviously, this is an example of how whale transfers can coincide with the short-term corrections for the coin, but this is just an anecdotal evidence, right? So we wanted to test this metric very shortly after we rolled it out to the masses to figure out whether there's any actual backtesting potential or whether we can prove the hypothesis of large spikes in whale transfers actually impacting the price of the coin in the short term negatively. We wanted to test if this was true on a sample size of 2,000 to 3,000 different coins, right? So what we did, and we published this analysis, I think it was about a month ago. No, it was 2 weeks ago, right? So very recently, we've backtested the impact of large transfers or or of this metric, whale transaction count, on over 1,000 different coins. So the idea is that we wanted to, we did what's called an event study, where we search for specific events in a coin's life, like these large spikes in whale transactions, and then we look for the price performance, or we analyze the price performance, the average price performance of those coins in the 20 days before such an event happens, which is this sort of local maxima or local peak in whale transactions, and the 20 days after the sort of peak whale transfer occurs. And we wanted to see what happens on average with the price performance of these coins 20 days before a huge spike in whale transactions and 20 days after a huge spike in whale transactions, right? So we have done this backtest on several different types of coin categories. The first sort of backtest that we've done is very straightforward. So we looked at all of the coins in our database that have a market cap of above 1 million US dollars. So this is the performance. And actually, let me move into the light mode so you can see it more clearly. All right, actually, let me zoom in. Maybe that's better. There we go. This should be good. All right, so it's actually 14 days. I thought it was 20. Maybe it's 20 days for another backtest that we've done. So this is the price performance of more than basically on 5,000 different events. Event being a major spike in whale transfers. This is the average price performance of the observed coins in the 14 days or 2 weeks before the whale transfer spike, and then the average price performance in the next 14 days or 2 weeks. So as you can see, there seems to be a sort of stable but very strong uptick in the average price of these coins in the sort of, in the days before the local maxima or the big spike in whale transfers, suggesting that in fact, as the price begins to rally, more and more large addresses are starting to become active and starting to take profits and dump some of their holdings, liquidate their exposure, and mitigate a little bit of risk, right? And then after the spike in whale transfers, what we found for this particular group of observed coins is that the price action mostly begins to consolidate. So over the next 14 days, pretty much the growth of the coin's price is completely curbed. And it starts to sort of consolidate around this 0% to plus 1% sort of price range, right? So the next step that we've done, or the next sort of backtest that we've done, is trying to make the criteria a bit more stringent, right? Because every coin with more than $1 million in market cap is quite a large amount of coins. A lot of them can be shit coins with very easily manipulated volumes. So what we've tried to do instead in the second backtest is, all right, let's try to tighten our criteria a little bit. And this time look at all the coins in our database that have a market cap of above 1 million US dollars, but also have more than 100 daily active addresses on average a month prior to the event. So you would be surprised. Actually, if you're watching our weekly streams on Friday, you probably wouldn't be surprised how little coins actually have more than 100 daily active addresses even today. Even with this entire sort of proliferation of the crypto market over the last 3 months, you would be surprised. I think it's in terms of ERC20 coins, there's only about 30 to 50 assets a day, ERC20 coins a day, that have more than 100 addresses interacting with them, meaning sending or receiving coins. So this is a very sort of, upper echelon of ERC20 assets, basically coins that actually have this type of activity on their network. So even though the criteria has been made more strict, the pattern looks fairly similar. So shortly after the spike in whale transfers, the price begins to consolidate, and the price growth is largely curbed. So we've done a few more backtests here, which seem to show the same sort of results. I won't get into too much of them just for the time's sake, but if you want, Brian, if you can share the link to this article in the description, in the chat, just so people can look at it for their own, that would be great. So this is sort of the first. Obviously, there are drawbacks to this type of study event as well. Event studies can kind of carry a whole bunch of hindsight bias with them. So we've tried to eliminate it in the study, and we've tried to look only at real time, at the impact of whale transfers or spikes in whale transfers in real time, rather than looking at historical data and figuring out, all right, this is, we now know that this was a major spike in whale transfers looking back at it 3 months from now, 3 months ago. That sort of hindsight bias can affect the study in a fairly impactful way. So in these types of studies, we have really tried to eliminate hindsight bias as much as possible and try to look at, what is a real-time impact of a whale transfer. Like if you look at it now, if you're on our platform and you see a major spike in a whale transfer today, what is on average going to be the impact of that spike in the next 14 days on the price of that coin? Hope that makes sense. So I'm going to show a few examples of how this metric seems to coincide with local price tops and general the behavior of a coin. So of the coin's price, I've already kind of shown what the chart looks like, or what the metric looks like in the case of Mana over the last 3 months. This is Uniswap. So obviously, there's not going to be, not every top is going to be sort of earmarked by a spike in whale transactions, but over the last, so this is last 3 months, let's maybe zoom out a bit, last 6 months, just to kind of show the pattern overall. You can see that the last 2 out of 3 tops were coinciding with a massive spike in whale transfers. So this one here before a very strong short-term correction, and then once we started to reckon up speed, once again with Uni, we had another major spike in whale transfers, which doesn't really account for or isn't explained by its price rally, right? Because the price rally was already going on here, but the whale transfers were fairly low, right? And then around the top, we really saw a major influx of whale transactions, suggesting that large addresses might be looking to move their bags for the time being and reduce their exposure at least a little bit. So, for example, this spike has not registered this price top has not registered the similar spike in whale transactions, suggesting as always that no metric is perfect, and we're never going to be able to solve all of the market's issues with a single metric, right? But this is something that we seem to be seeing quite often happen with low to mid cap coins. So here's Engine for the last 3 months as well. Presumably exchange wallets don't count toward daily active addresses, otherwise less than 100 AEA is the worrying gotcha. But yeah, so the only thing that would count towards daily active addresses are daily deposits. Basically addresses that are used to funnel money to exchanges. But then once the coins actually get to exchanges, those aren't, it's a closed system. Those aren't really registered on a blockchain, right? So this is Engine for the past, actually, let me zoom in just so you can kind of see what whale transaction count looks like for Engine. So we see a big spike in whale transactions here. Immediately after this plus 10% spike in Engine's price, and then pretty much around every single local price top for Engine. And Engine had a massive run, obviously mostly propelled by the mania for NFTs. Pretty much every one of them signaled an incoming or an elevated risk of an incoming short-term correction, right? So this is another example of how whale transactions can work. Let me maybe show Matic. I think had a massive spike recently. There we go. So obviously, this is as far as holy grails go, is something like that would be, great. Like I said, it's not going to register every time. Like you see several sort of smaller spikes here around local price stops, although they're not really that significant. And then this sort of entire move down doesn't really have any sort of simultaneous spike in whale transfers. However, the actual price stop so far has been fairly clearly earmarked by a major spike in whale transactions. Now, even though our backtest has shown that the spikes in whale transfers do seem to often coincide with a period of price consolidation and sometimes price correction, I have found a few examples so far. Like I said, this is a very new metric, so we're learning as much as you are as far as how you can use it. I have found several examples, mostly when it comes to large cap coins, where the spikes in whale transactions can also mark local bottoms, right? Which basically I think kind of points to facts, especially because this is a metric that tracks 100K and up transfers. You can't really consider those as whale transfers for coins like Ethereum and Chainlink. So I think that can really just point to large-scale holder holder capitulation when you see massive spikes in this particular metric in the case of coins like Ethereum. Let me show you what I mean, and maybe I can explain it a bit better. So when it comes to Ethereum, you will see a major spike in whale transactions around two local Ethereum Ethereum tops. So one is here, and then another one is here. Let me show you the price, just so you can kind of see how the two coincide. So like I said, 100K and more, these transfers aren't really, when you look at a coin like Ethereum, I don't really think that you can label all 100K plus transfers as whales, right? So the spike in this type of occasion, I think can also mean that a lot of even like mid-level holders are looking to exit the market in a panic. And that's, very often we at Santiment here believe that, buying when there's blood on the streets can be an interesting strategy, sometimes very effective. Obviously, none of this should be construed as financial advice, but it does seem to point to a period of wholesale or network-wide holder capitulation, which very often, if there's enough sort of buy-side pressure or enough people looking to buy the dip, can very often point to a short-term top and point to an elevated potential for price recovery. So this is what you can see in terms of Ethereum. You can see the same thing in the case of XRP. Actually, for XRP, I think it very nicely mirrors both the local tops and local bottoms, which is quite interesting. So obviously, or XRP had just a ridiculous sort of price action over the last 6 months. But as far as what you can learn from it in terms of its whale transaction count, you can see spike here, marking the local top. You can also see a major spike here, obviously during this massive price rally. Another big spike before the initial or immediate correction. We even saw it yesterday, the biggest spike in basically 2 weeks before Ripple started to correct. However, you can also see there has been a big spike in whale transfers here. Around the first local top and local bottom, and then actual bottom as well, suggesting that because again XRP is definitely not a mid-cap coin. These types of spikes in whale transactions can also mean, especially if they kind of coincide with a period of price correction, can point to wholesale panic. A lot of FUD and people looking to FUD out of the coin for the time being, which again can be an interesting time to accumulate, right? So this is sort of what we are so far experimenting with when it comes to whale transfers. In the future, if you guys are interested or if you have ideas on how we can improve this metric, like I said, one of the ideas would be to actually include a toggleable sort of widget where you can set your own amount that you would define or label as a whale transaction, maybe have like 3 or 4 options, 100K, 500K, 1 million, 10 million for coins like BTC, right? And see how that sort of impacts the numbers. Maybe that would be an interesting addition to the metric. If you have other ideas, let us know. But so far, this is sort of what we've been able to deduce from the metric by, in the month and a half that it's been live on the platform, right? So before we move into the next one, Max, anything you want to add as far as whale transfer count?
No, it's okay.
Okay, good. So perhaps measured by percent holding rather than price, so it doesn't matter if low, mid, or rate. Yeah. That's also a possibility that I think we can consider, Arias. Like I said, it's a fairly new metric, and I'm always collecting feedback as far as what we can do with it. Actually, as far as measuring by percentage of holdings, I think we can do some interesting backtests with that as well and see how it impacts the price. We'll see. I'll check with our data science team. So this is what whale transaction count looks like, right? So the second sort of metric, and probably the metric that most people here are familiar with as far as how to look at whale behavior on our platform, is what we call holder distribution, or starting today, because we added a new sort of metric tree to our platform. Starting today, we call it supply distribution. So essentially, there are two types of supply distribution on Sanbase: supply distribution by number of addresses and supply distribution by balance of addresses. So this is not per se a whale metric, because it doesn't only look at the behavior of large addresses, but rather gives a comprehensive overview of the entire sort of ecosystem of a coin, from the very low level holders, so 0 to 0.001, all the way up to 10 million plus coins, or holders of amount of holders that hold more than 10 million of a particular coin. So very shortly, to explain the difference between these two metrics. So supply distribution by number of addresses shows the amount of addresses holding a particular coin. Very simple. So for example, let me just show the price here. So for example, here we're looking at the amount of addresses holding between 1,000 and 10,000 XRP, right? So it goes from 255K all the way up to 266K today, right? So it's basically just, okay, how many is the particular group of holders rising in terms of numbers, or is it declining? Which can in and of itself be a pretty important thing to look at. The second metric, and the one that I personally use more, is supply distribution by balance of addresses. So what's different about this metric compared to the first one is that supply distribution by balance of addresses actually looks at the total amount of a coin held by a certain group of addresses. So for example, using the same group here, 1,000 to 10,000, here this metric shows the amount of addresses holding between 1K and 10K XRP. Here we see the total amount of XRP being held by this group of holders, right? So that's the difference. And you can select either the percentage of XRP's total supply being held by these addresses, or the absolute number. So for example, here we go. Oh, wait, there we go. So the amount of XRP being held by addresses holding between 1,000 and 10,000 XRP is 1.6% of the total XRP supply, or about 852.7 million coins at the moment, right? So, I mean, it doesn't really matter all that much unless there are, massive changes in the supply of a coin, which one of these you look at. But this is sort of the difference between these two groups of metrics. So what we like to do is when it comes to this particular metric is we like to look at the behavior when it comes to figuring out how you can use them from a whale perspective, right? Obviously, we like to look at the behavior of these sort of mostly four largest groups of addresses, with a few caveats, right? So for most coins, it is very likely that the largest group of holders, 10 million and above, is going to be largely populated by exchange wallets. And we have a few metrics that we've kind of started working on that might be able to even show that visually very more clearly than it currently does. But this is why usually the biggest or the two biggest groups, when you see spikes in these two groups of holders, it can usually point to a accumulation, not an accumulation by whales, but rather a spike in exchange holdings, and therefore a rising sell side pressure for a coin. So for example, this is XRP, right? You can see a spike in this biggest group of holders, both here during this period of correction, and then here a lot of sell-offs that are at the local bottom, and then another sort of spike in 10 million and above group right here at the sort of large peak in XRP's price action, right? So this particular group is usually dedicated largely to exchange wallets, whereas the previous several groups are mostly going to be large addresses, right? Just generally individual addresses, private owners, so forth. So I have a few examples prepared and how you can use this metric to figure out which group is might be interesting to look into for the future based on their historical patterns, and which group might, based on these historical patterns, actually have the biggest pull on the market, or has proven so far to have the biggest pull on the market. So the first example here is Chili's. If you've been following the NFT news, Chili's had an impressive beginning. Well, actually, it was beginning of March, end of February. It was really the first NFT related ERC20 coin to started pumping. And so this is these are some of the groups of holders that we like to look for Chili's, for example. So let me show you only the distribution. Oh, no, wait, I actually deleted the wrong chart. One sec, let me load it up again. Yeah, so I actually wanted to show the balance of addresses rather than the number of addresses. So we are going to be looking at, I believe, the 100,000 to 1 million group, or the one above. Let me just see when it loads. Oh, I have a bunch of charts already opened up, so that might be one of the reasons why I'm lagging a little bit. There we go. All right, so this in particular is the total supply held by addresses holding between 1 million and 10 million XRP, right? So they've been kind of assuming that this group of addresses is largely populated not by exchange addresses or exchange wallets, but actual large Chili's holders. They've been accumulating throughout this rally, right? And really the beginning of the end for Chili's holders, if you zoom in here, for large Chili's holders. Okay, so there have been several sort of dips in Chili's in the holdings of this particular group of addresses. So the first one was here around this sort of local top before Chili's actually started going like crazy. And then we had another period of, a drop in the total amount of Chili's being held by this group of addresses here, from 4.3% of total supply to 3.3%, coinciding with this local top in the period of short-term price correction. And then another, large sort of dump by this group of addresses here at the first interim top for Chili's. And then eventually, right before the all-time high for Chili's, we had the beginning of another sort of downtrend for the amount of CHZ being held by this group of addresses. So we had it first. It started here, and then another sort of a dump around the local top here before Chili's continued to correct. Right. So keep in mind that this metric, similar to our whale transfer count metric, is currently showing a daily metric, so it updates on a daily interval. However, we are planning to introduce shorter time intervals both for the whale transfers and holder distribution or supply distribution, because we've seen that very often, looking at them maybe on an hour or 4-hour scale can be even more impactful, right? To capture the moves in real time. So this is one example that I wanted to show. Oh, there we go. Let's check out Link. First of all, why did you get into a new window? All right. Let's check out Link, because Link is out of these, I think, is the biggest coin. So I just want to show you that this type of analysis can work not just for very sort of mid to low caps, but also some of the biggest coins in the world. So Chainlink, and we are here looking at the 100K to 1 million group in particular. All right, so this is the amount of Link being held by addresses holding between 100,000 and 1 million links. So at these prices, this is basically just Chainlink millionaires, right? Anybody that is holding more than $3 million worth of Link at this point in time. So fairly easily, you can start to see patterns already begin to form here. Whereas even though the general sort of pattern has been up, for basically since early November here. There has been a period of distribution by large chain holders, and then a long-term, similar to Bitcoin whales, there has been a long-term accumulation despite several moves down, sometimes around local tops like here and here. And then we have seen a sort of concerning downtrend as Chainlink has been approaching its new high here. Basically, not even at the very top, but it started a few days earlier, possibly, pre-dump positioning, or all basically just some of the large Chainlink holders already selling here at the sort of $25 mark, feeling that this is probably going to be a strong resistance level. And then there has been a sort of a major drop-off or decline in Chainlink holders right around the peak here. And in general, it has consolidated at these lower levels before Link started to dump. And then we had another sort of accumulation period, presumably large Link holders looking to buy the dip, which makes sense. Chainlink Marines are fairly loyal to their coin. And then we had two major dips in the total balance of these addresses. First, before this local correction here, and then another dip really around the current high for Chainlink, which is $30, right? 31.6 actually. So this is the type of addresses that you want to look into for a large coin. So it's probably not going to be 1 million to 10 million and 10 million to above, because they're usually, like I say, reserved for mostly centralized exchange wallets. It's usually going to be this and this group. So for Bitcoin, it's usually going to be 1,000 to 10,000 and 10,000 to 100 maybe. Usually this one, but for
Gina, I think maybe it's better to say it's in USD terms, because it's always amount of coins. It varies greatly if it's like decentralized.
Right.
Where I don't know what was the price.
It's $1 now.
$1.
Maybe 0.
Or Chainlink when it's 20, 30. Or so this amount changes, and typically for smaller coins, impactful token holders, which are not exchanges, will be between maybe 10 and 100,000. For bigger ones, Chainlink including, and decentralized also in this area, it will be above 100,000. Yeah? And for Bitcoin, it's like millions. Yeah, and all of them, but you will see the same patterns constantly. These impactful holders, they will be accumulating, and some point of time exiting, then again accumulating, and the price will react to it. It's quite amazing. Mm-hmm.
Yeah, for sure. It's best to think about it in USD numbers. You're right, Max. One additional example of sort of mid-cap coin and how its large holders seem to react to price changes is here. Okay, so this is interesting, right? So this is Engine and the last two groups of holders. So 1 million to 10 million ENJ, which is basically 2 million to 20, and then 20 million and above, which is mostly going to be I think populated by exchange wallets. So you can see here they basically mirror the moves of each other. And if you look at this particular group of ENG holders, so 1 million to 10 million, let's zoom in. You can kind of see that they've been on a accumulation spree for maybe the past 6 months, and then there have been recently more of a sort of rising anxiety by large ENJ holders. So after a period of accumulation, the first dip happened right around this plus 10% spike in ENG's price, about once it broke 0.7, I think, level. There was a massive drop, so from 22% of ENG's total supply to just 19%. And then another sort of period of accumulation up until the first sort of local top, where we saw another decline in the amount of ENJ holders, of the balance of large ENJ holders, and then another period of accumulation coinciding with the price rally. And then since then, pretty much at the top, we saw a major sort of decline in their collective holdings, right? Suggesting that for the time being, large ENJ holders might be looking to exit the market, similar like they've done here around this local top, and then here around this local top before they started accumulating once again. Maybe let's show one more example of this, which is OMG. So OMG currently $5.46. Right. Let me first zoom out so you can see a bigger picture. Generally, you can see that OMG holders, the general pattern has been up or accumulation. If we zoom in, however, especially around this all-time high for OMG, after a period of accumulation, we first had a decline around this local top here, and then another sort of pretty big dip in the total amount of OMG being held by addresses holding between 100,000 and 1 million OMG here. So they essentially started dumping maybe a day or two before the top, but really 24 hours before the before the all-time high top started, we saw a significant decline in their collective balances, right? They accumulated into the dip once again, and then started declining into before the correction here as well. So these are some of the patterns that we very often see for large holders of different coins. Obviously, like I say, there are several things to keep in mind. One thing to keep in mind is that the biggest group is mostly or most often going to be populated by exchange wallets. However, we have some sort of labeling improvements in mind. Don't want to go into detail too much, but where we can actually, in the future, hopefully show how many of these addresses are actually exchange wallets, how many are labeled as non-exchange wallets, and what their particular balance within that group is, right? So that's an improvement that we're maybe looking to add to this metric in the future. For now, however, I suggest checking out the several biggest groups before the 10 million plus, and considering them to be largely populated by individual, actors, and then the largest group being, mostly exchange wallets, and therefore when you see a spike in that group of holders, I suggest also checking the exchange inflow for the metric to make sure that, or to confirm that this is actually suggesting a rise in sell side pressure rather than a rise in accumulation of a particular coin, right? So with that being said, Brian, I think you have a specific template that you've created using this metric, which kind of expands on how this metric can be used to maybe figure out interesting, in real time, interesting coins to look into depending on what their whales are doing. So you want to maybe share your screen and kind of give us a walkthrough there? We can hear you, by the way.
Yeah, let me know if you can see this okay.
I can see it, yep.
Perfecto. Okay, so we're going to start here. Let me remove my window. Okay, so what we're looking at here, guys, I'll actually switch to the simplified version for now. Infographic. There it is. Okay, so what we're seeing here is the 1 day, 7 day, and 90-day percent change in what we deem whales for each respective asset here. We're looking at around 40 different assets. So for the most part, most of these assets, we deem a whale to be any holder that holds $100,000 or more in USD. Now, a few exceptions include Bitcoin, Ethereum, Chainlink, Binance Coin, and a few in the top 10, essentially, in terms of market cap, because of the fact that there are so many addresses in comparison to smaller, assets like Status and ELF and, even Ren to an extent. We would simply have too many whales if we were to go with the $100,000 or more rule of thumb for assets like Bitcoin, Ethereum. So for them, of course, Bitcoin, we deem a whale to be any holder that holds at least 1,000 or more, which would translate at current price levels to something in the range of 55,000 times 1,000. So we're looking at around $55 million or more for them. And there are still, there are still about 2,000 or so of those addresses when we talk about that criteria. All that being said, we're looking at the percent changes over time. The yellow bars here are revealing the 1 day percent change in the total number of these whales for each designated rule of thumb, depending on what asset that is. The blue bars are the 7 day holders change, and the purple bars are the 90-day change. Now you'll also notice these skinnier columns, and that's the price change. It looks like a lot going on here, but all of these lines and columns have a distinct purpose, right? So if we were to just isolate one and look at, for example, Engine here, right? We see that Engine had a 1-day holders percent change of 6.97%. That means just over the last day, there was about a 7% uptick in the amount of whales that hold at least $100,000 in Engine. That is significant, right? It looks like on the 7-day change, there hasn't really been any significant difference. It's basically been nullified. So before this previous day, we were actually down about 7%. So we're back to about even now. Over the last 90 days, instead of just showing a simple 90-day percent change, because it's such a long time span, I made it a versus mean change, which calculates slightly differently. It basically means that we're taking the overall average over that 90 days and using a mean average in order to find where we're currently sitting today based on a 90-day scale. So long story short, it's going to function close to the same as the 1-day and 7-day direct percent change, but this is more of a based on mean type of scale, which is a little more effective than just showing where it was 3 months ago, because that might lead us to get some outlier numbers. In general, you'll want to look at assets that have a high percent on the positive side for 1-day, 7-day, and 90-day all together. For example, Aragon here, up 7.14% just in the last day, 16.7% in the last 7 days, and 14.2% on a 90-day against mean average, if that makes sense. And I actually brought up their whale transaction number here, so we can look at what their numbers look like. I'll actually just isolate the gold line here, which is their amount of holders that hold at least 100,000 tokens. So in this case, it's about $676,000 or more as deemed to be a whale for Aragon. What we can see here is exactly what the model's showing. We had this giant dip back in late January, but ever since, we're actually on quite a rise here, especially just over the last week, right? We're seeing that it had a big dip on March 7th, and it's been surging, going from about 199 to a modest 206 or so. But either way, that's a bit of a percent change that is going to show in a positive direction, especially on the 90-day scale. When we go back all the way to January and even the end of late December, there's a pretty tremendous uptick that's worth noting here. We can also see for Ethereum, if we look at just the gold line has been ticking down a little bit, but not significantly. Bitcoin, on the other hand, has taken quite a dip in terms of 1,000 or more that I mentioned a couple of minutes ago. The 1,000 or more addresses were at a peak of about 2476-ish or so back on February 8th. So give or take 5 weeks, 6 weeks ago. Now we're all the way down to about 2275. So that's a big drop that our model has been showing. I keep Bitcoin over in its own column with larger bold numbers, so it's more easily findable than the rest of the assets here, as it's going to be one of the most commonly referred to, right? But basically, this model's showing that we've dropped, negative 2.2% in the last day, negative 2.5% over the last week, and we're about negative 4.4% down versus the mean over the last 90 days. And basically I have this sorted right now to show what the largest 1 week percent changes are at the top and lowest at the bottom, right? And you want to be looking in terms of short and mid-tier trades. And of course, it's doing a refresh right now, so give it just about 30 seconds and this will be back up. But in terms of shorter midterm trades, the biggest, I think, in terms of usefulness metric to look at here is the 1 week percent change, because it's going to give you kind of an accurate look at where things have moved and you'll be able to take advantages of some divergences here, right? So for example, Ren is up 5.6% in Wales over the last week, but it's one of the lowest returns of any assets in terms of price change, right? So if it's down 15%, when most of the price changes are a little more neutral here, altcoins are all a little universally down, but Ren is more down, right, at native 14.7%. But it's one of the better looking whale percent changes. This would be considered a bullish divergence, at least for this metric alone. Of course, you know, as Dino and Max have mentioned, you don't want to look solely for just whale transactions as a means to comprehend where markets will be headed. But it's certainly one of the most powerful, and we've done enough backtesting to really stand by that theory. So yes, long story short here, you're going to want to look at the 1 week percent changes in particular. You can see Matic and Sushi are actually off the charts. And I'll actually look at Sushi really quick because it's fascinating what's going on there. So the whales, just to make sure I have the metric right, are going to be 10,000 or more in this case because the price is over $10, but not over 100. So the pink line in this case is showing that we had a huge uptick about 11 days ago where we were at 225 whales and now are all the way up at almost 300, where we actually did get up to 309 back on March 11th. So this is an indicator that those with a lot at stake in Sushi are accumulating quite steadily, especially in March here, where there was one of the biggest and most rapid upticks we've seen in the coin's existence so far. So another coin that's going to basically reflect what's going on in the holders distribution, but the advantage to doing it in this model is that you don't have to open, you know, each one of these charts individually on Sanbase and then modify the amount of tokens held to find the correct amount of whales for that particular asset. It's all right here, right? And on top of this chart, we have two other charts that basically show the same thing, but in a different fashion. One is the weighted infographic. And what this does is essentially multiply those top tiers by 10. So for example, if we look at Bitcoin, Bitcoin, as mentioned, has whales anywhere from 1,000 all the way to infinity tokens in their wallets, right? 1,000 coin holders are not as impactful as 10,000 or more coin holders, which is why in the calculation on the back end for this chart, we have 10,000 or more, exactly 10,000 to 100,000 as opposed to 1,000 to 10,000. Those tiers are worth 10 times as much value, just like they are in real numbers. Anytime there's a change between 10,000 to 100,000, that's going to be 10 times more weighted on this calculation percent change compared to the 1,000 to 10,000, and vice versa. If there's a 100,000 to 1 million coin address that has had a change, perhaps going from 5 to 6, right? Because there are very few of those for Bitcoin. That's going to be worth 100 times more than the 1,000 to 10,000 tier. So you're going to see a lot more drastic changes that arguably are even more reflective than what's shown on the normal just 1,000 or more in totality chart like we're seeing here. So long story short, this infographic is going to just show the overall amount of whales on a percent change basis. The weighted infographic takes it a step further and allows you to look at each tier broken down by more and more weighted value if it's 10 times more than the previous whale. So even if we talk about like Aragon, which is 100,000 or more, if there's a shift in the amount of 1 million to 10 million coin addresses, that's going to be 10 times more weighted on this calculation than the 100,000 to 1 million, if that makes sense. It's a little in the weeds. It might be more comprehensible if it's written down on paper. And I have talked about that a little bit in one of my previous insights about this model. But if you'd like to learn more about how this particular chart is calculating differently than just the regular total whales difference, I'm happy to have a little DM conversation with you, or just DM me in the general chat on our Santiment network, and we can go over everything. And then, of course, just for consistency, whether it's the overall numbers that you like or the weighted overall numbers for percent change in whales, I have an average chart that basically combines it splits the difference between the weighted infographic here and the regular infographic here. And the advantage there is uh, it kind of dilutes one impact over another, and you can get basically a snapshot of how both are looking simultaneously without getting too skewed by the weighted one, or too dumbed down, so to speak, if you're only looking at the total amount of whales without regarding the higher tiers being worth more. So essentially, this is a different splitter, and arguably it could be the best one to look at for just a quick snapshot if you aren't sure whether you'd like to go off of the weighted strategy or regular strategy. So yes, this is a very powerful model. I highly recommend, checking this out. Dino and Max, if you guys have any questions about it, feel free to bring them up here on this call. Otherwise, I can sort of talk about this individually with anyone who has questions.
Yeah, thanks, Brian. I think it would be best that people that are interested in the model and how it works and the different possibilities that they can, leverage with it, probably should just DM you or ping you in Sanbase Pro Chat. Just because we're already an hour in, and I do want to try and cover another metric if possible before we head off. So thank you for that, Brian.
You bet.
If you're interested in Brian's model, how to use Sandsheets, which is our plugin for directly importing sentiment data into Google Spreadsheets, let us know in Discord. We have a variety of tutorials on it. It's a very powerful tool if you are not satisfied with just the pre-made metrics that we have for you, but also want to discover your own unique ways into looking into the market with our data. It's probably the best way to go. So let us know in chat if you're interested in that. The last group of metrics that I want to look into here is one that we don't really talk about a whole lot on our weekly streams and sometimes in our insights, but I think is very potent as far as discovering specific market moving addresses and discovering addresses that you might want to keep an eye on, monitor, and potentially not front run them, but use them to front run the market in general. And this is hiding under the network activity of a metric all the way here to top transactions table, right? So what you do is you click on top transactions, and what is going to happen here is you're going to get a long list of the biggest transactions of a particular coin that you're currently looking into for the period of time that you're looking into it, right? So currently we're looking at Engine, and at the moment this list is showing us the biggest ENJ transactions or transfers on the blockchain between February 15th and March 17th. And as you can see, there are a number of labels for each address. These are labels that have been put there by the Santiment team, and we are constantly improving our labeling game, right? So, for example, this group this particular address has 3 labels. It's a whale, it's a DEX trader, and so basically an address that interacts very often with the decentralized exchanges. But most importantly, it is labeled as a centralized exchange wallet, which is SEX, right? So once you click on a metric on any address, you can actually see the balance of this metric over time in a particular coin. And then you can also plot the price of that coin. So let's say I want to look at what this particular address has in terms of Engine. And this is what it shows. It shows the overall amount or balance of ENJ over time for this particular address. And it also gives you this nice newly added distribution of this address in terms of what particular coins it has and how much that is in USD terms, right? So how do you use this metric or this tool to discover new addresses that you might want to keep an eye on? And how do you actually keep an eye on them using Sanbase. So I have a bunch of examples here. I'm not going to get over most of them, maybe 2 or 3. So if you want to see all of these and kind of look into them a bit more for yourself, I will be sharing this article or this sort of list of addresses in our Sanbase Pro group. So first here, this is the one address that I highlighted here that I wanted to show you guys. So I was interested. Let me go back. I was interested in this particular top for ENJ, right? So I was interested in the general activity of addresses around the highest or the price all-time high for Engine, and whether I could discover any market moving addresses or addresses that were particularly adept at playing the ENJ market at this point in time. So here are the setups that I've used. I've looked at all of the biggest transactions between the 14th and 16th of March. So basically this move here. And I discovered a number of addresses, but the one that I want to look into is this one. So you filter them out by value and look at the biggest transactions first. So the way that I like to use this metric is twofold. Number one, I like to look at inflows from a deposit address to an actual exchange wallet. So deposit addresses are addresses that basically exist between the cold or hot storage of a centralized exchange and you as a user. So when you send ENJ to exchanges, it doesn't directly go to an ENJ to a CEX's or centralized exchanges storage. It goes directly or it passes through a deposit address. So when you see a transaction from a deposit address to a centralized exchange, it basically means, all right, there's a bunch of ENJ in this case being moved to exchanges, presumably to sell. And then the other sort of pattern that I like to see is a deposit or a transfer from a address that is labeled as a centralized exchange trader or CEX trader to a CEX deposit, which is sort of the first line in that move of trader to deposit to a centralized exchange, right? So the address that I found that was very interesting, I believe, is this one. There we go. So this is a transfer of a whale or a centralized exchange trader, so an address that very frequently interacts with a centralized exchange, to a deposit address. And you can actually look at it here. You can open it to see exactly where it went to. So it's from this address to this address. And then when you click on this address, I believe it goes to Binance. Yeah, it goes to Binance. So this is a deposit address. And then eventually it goes to Binance. So when we looked at this address, and let me cancel out Ethereum and let me look at or plot the price of Engine over time. One of the things that I noticed is this was actually what happened on the previous top for ENJ on March 3rd for this address in particular. So this is an address, and let's look at the old time just for consistency's sake. There we go, looking at the last year of data. This is an address that went into ENJ or accumulated about 2 million ENJ on November 12th, when ENJ was around 0.14%. Oh, sorry, $1.4. And then $0.14. And then it basically moved 1 million exactly of its total holdings to a deposit address on March 3rd. So if we zoom in here, it was right before this sort of first period of price correction, indicating that indeed this was a potentially dangerous move, or one of the large holders of ENJ were moving their coins to exchange to take advantage of the rally, right? So it's these types of moves that when you are able to find these addresses, especially if these addresses still have a particular amount of that coin in their balance, which this one does. It has basically still 50% of its total balance that it accumulated over time, that you might want to keep a close eye on. And I will show you how to create an alert for these types of addresses very shortly. But before that, I want to show you a few more examples. So I also looked at Mana, the pump before last. So when we look at Mana and we look at the period between March 3rd and 5th, which is here, right? So I wanted to see if I could find any interesting addresses that were active between March 3rd and March 5th. So the one that I found here particularly has sent about 2.4 million mana. It's a trader to a deposit. Let's look at it. So 2.39, it's this one. So yeah, basically, as you can see, I think it's one of the main sort of trader to deposit addresses that you could find with the biggest, in terms of the biggest transactions, because mostly or usually the biggest transactions are going to be like Binance to Binance. I believe this one, so if we look at this one, it's probably going to be Binance to Binance or Huobi to Huobi. Yeah, there we go, Binance 1 to Binance 7. So it's just internal reshuffling. So you do need to kind of go down this list a little bit to actually find market moving addresses, right? So the one that we found, 2.399, here it is. Let's look at what the historical behavior or historical balance of this address is in terms of its mana holdings. So let's look at the last year. Here we go. Actually, first let's look at the old time. There we go. So these are the holdings of mana for this particular address. It seems like it has accumulated most of its balance here on March 1st, 2018. So pretty much, well, close to its low here, bear market low. When we zoom into the last year of data, however, we see several interesting points. Number one, we see that it dumped about what is it? Well, it's almost 2 million mana on August 9th, right before mana started to consolidate and hit its local peak. And then we had another sort of period of dumpage before mana sort of disappointing end of August and start of September. And then if we zoom into the last 6 months, you can see several, interesting things. So first of all, they dump an additional 790,000 Decentraland here around the first local top. It seems like they buy back very shortly afterwards, but it is pretty much right at the local peak here. And then once again, we see another sort of move down before mana's first correction, and then additional 1.4. So this is 4.8 to 2.4, so 2.4 million mana being moved before the local top here, and then another 1.4 million Decentraland being moved before another local top. So currently this address holds additional 1 million Decentraland, which is at this price is I think around $900,000, something like that. Yeah, $980,000. So if you find this type of address, and I showed you kind of how I like to look at it. It is a bit tedious, but it is the only way that you can really dive deep into a particular, address and find, holders or market stakeholders that are actually able to seemingly move the market, or at least are very good at playing the market. So if you want to be notified the next time that this particular address does something, let's say it starts dumping the remaining 1 million Decentraland, because you're in Decentraland and you want to know when is the right time to dump, or if you want to maybe figure out when it's the right time to buy when this address starts to accumulate. Let's take scenario one. This address dumps its remaining 1 million mana. So what you can do is you can create an alert here, and you say, okay, let me know when the balance of this address falls below 1 million. And you can see that this is when it happened in the past. Currently, it hasn't happened because its balance is exactly 1 million, right? So you can set up a time window, let's say in the last day, once it drops below 1 million in the last day. And you can set up how you want to be sort of notified about this move. Do you want to enable email alerts, Telegram alerts, push alerts, whatever you want? You can put this signal to be private or to be public so that other people in the Santiment community can copy trade you. And you can name the alert whatever you want. So name it Mana Wallet Dump Alert, right? You set up how you wanna set it up. For some reason, I mean, I have Telegram alerts enabled. Maybe I'm on a different account. And in general, at the end, you just click here, submit, and your alert will be created. And this is then confirm. And this is then what is going to happen the next time that this address starts to, shed some of its mana. you're going to get an alert saying, look, this address is starting to dump the remaining Decentraland, so you might want to be on the lookout, especially if it happens during a price rally, because it seems like it is able to sort of catch the tail end of a pump several times already, right? So another way that you can use this metric is by looking at the deposit activity, or the activity of deposit addresses. And I think maybe I have, there we go. So for Matic, for example. So I looked at Matic 11th to 13th of March, okay? Let's take a look. Matic had a massive spike, obviously. So 11th to 13th, this move here, right? Okay. March 11th to 13th. And the address that I found interesting was a deposit of almost 10 million Matic. So let's see. Seems to be this address, right? 999934. Yeah, there we go. So it's a move from a deposit address to a centralized exchange wallet. So in this case, the pattern is actually going to be a little bit different, right? Because this is a deposit address rather than a private wallet. So instead of the bear signal being the address has a decline in its Matic balance, the bear signal would be the address suddenly gets an influx of Matic coins to its to the address, because it points to some other address moving a large amount of Matic to this deposit address, presumably to sell, right? So if we look at the last 6 months of data, price of Matic. So this is what happens. So this is a deposit address for this particular person, whoever it is. And these are the sort of points in time where we saw a massive spike in Matic balance of this address. This is a deposit address. So when there's a spike in Matic holdings of this address, the idea is, okay, somebody is sending a lot of Matic to exchanges. Therefore, might be a good time to become a little bit cautious, right? So here, this address received about 16 million Matic, which at this point, how much is Matic at the moment, or was at that time? Okay, 0.1, so about 1.6 million. There we go. Dollars worth of Matic were sent to this address right before or right at the local top before a correction. And then we had another spike in about 10 million Matic right at the another top here before an incoming price correction, right? So in this case, if I think, all right, this is a deposit address that I might want to keep an eye on, so the next time that somebody is moving a bunch of coins to it, I want to know. And it doesn't seem like they are moving a whole lot of coins otherwise, only when they're looking to dump an extensive amount of coins. So I might want to create an alert saying something like, let me know when the balance of this address grows more than 100,000 Matic, right? So it will tell you the last time it happened, and then you can set up your how you want to set up an alert, email, Telegram, or push notification, and create an alert. And then you will know the next time that this address receives an exorbitant amount of Matic, because it seems like in the past, once that happens, it's usually a precursor of a short-term correction. So these are some of the things that really go a little bit more into the weeds. But really, there's only so much you can do by looking at the entire market or the entire network of a particular coin, like all of the addresses that are holding between 1 million to 10 million Decentraland, for example, right? So that's maybe 400 or 500 different addresses, whereas usually they're not all active even during the pumps. So really what you want to look for or find are those specific, 5 to 10 addresses that are mostly moving the market, or that are significantly impacting the price action of the coin in the short term. And the best way to do it is by scouring through the largest transactions during pumps to see which addresses were active that seem to play the market well and seem to impact the market in a in this case negative way. So then you can do several things. If you find a trading address that has dumped a lot of coins at a local top, you can set up an alert for the next time it dumps or the next time it accumulates that coin. If you find a deposit address that has received a lot of coins at the top, you can set up an alert the next time it receives an exorbitant amount of coins, so that you can be wary that a short-term correction might be incoming. Obviously, nothing is set in stone, but these are the types of patterns that I like to look for. So I hope that makes sense. Let me see. Is it better to look at the exchange inflow metric rather than a specific SEX deposit address? I think it depends. I think there are two different things there. So when you look at the exchange inflow metric in general, let me show you exchange inflow formatic. Both have merits, I'll say that much. So for example, exchange inflow can definitely show the sort of network-wide tendencies of Matic holders, right? Matic speculators. So for example, you can see spikes in exchange inflow here around the first stop and then around the all-time high as well, suggesting that at both junctions, as well as maybe here and here, as well as a cluster of spikes, at all of these junctions, the network-wide consensus among Matic speculators seems to have been, let's dump this, right? So it's not only going to be whale behavior, it's also going to be general crowd behavior, speculators, both retail sized and whale sized, right? I think that also plays a very important role in figuring out where we are in a particular coin cycle, because a lot of times these spikes in exchange inflow, especially during pumps, also tend to mark local price stops. We've seen it hundreds of times in the past. So I think this also is sort of an additional layer of analysis when you're looking at a particular coin's short-term potential. What is the exchange, the general sort of network-wide exchange activity? Are most people holding their coins and not really sending them to exchanges, which might suggest they're fairly confident that the coin is going to continue to rise in price? Or are they starting to dump? And especially if they're starting to dump at a strong rally, it usually indicates that there's a network-wide rise in sell-side pressure that's not easily going to be absorbed by whales, because whales would be they would have to buy this coin at a premium, which usually doesn't really happen in real life. They will, a lot of people just wait until the coin kind of corrects to buy the dip instead. So usually these spikes in exchange inflow also have a tendency to mark local tops. However, I think it's a different use case. Here, you are not really looking at network-wide trends, but you are trying to find whale addresses that are trying to play the market before the general exchange inflows, even spikes, right? For example, you've seen, I think, in the case of ENJ, there was the address that we were looking into. They didn't dump at like the actual price stop here. They dumped even shortly afterward. I think it was basically a pre-dump positioning where they were moving money to a deposit address, not at the very top, but actually a few, maybe 24 hours sooner, suggesting that they were preparing to dump. So in that case, you're looking for specific addresses rather than a network-wide sentiment of Matic or ENJ speculators, whatever, in order to figure out, these are the addresses that I want to copy trade and front run in the future, or front run with in the future. I think both have merits. It's just one is kind of looking at the entire network, and the second one is really trying to zero in on 5 or 10 wallets that we believe have the most impact on the market, right? So that's gonna do it for today, guys, as far as the metrics that we are going to cover. So just as a overview, we've covered 3 types of metrics today. So whale transactions, holder distribution, and top transactions, and how you can identify specific addresses and set up alerts to monitor their behavior in the future. There is one group of metrics that we haven't really covered here, which is supply held by top non-exchange addresses. If you're interested in that, let me know, and I'll share a link to this document so you can kind of see for yourself how we like to look at this particular group of metrics for, and how they interact with the coin's price. Maybe we can use it for another webinar. I think we're already about 20 minutes past what we wanted to do, so don't really want to spend more of your time than needed. I hope you found this useful. Like I said, many of these metrics are still, being updated. We're looking for additional ways to improve them. So if you have any ideas based on what you just saw on how you would improve these metrics, or how you would like to use them that you currently can't use them, please let us know in chat, and especially on Discord, because we're always looking at additional ways that we can present whale activity behavior in ways that currently aren't available on the market. I think, for example, top transactions table and the ability to zero in on a particular wallet and then set up alerts for that particular wallet is super potent. But if you have additional ways that you would like to do that sort of granular analysis, let us know. Alternatively, if you want some other network-wide level analysis that we currently don't cover on the platform, let us know. We're always trying to expand our whale metrics in new ways, because it's something that a lot of people like to look into. So we'll definitely take your feedback at heart and try to improve the platform in the future. With that being said, thank you all for joining. If you have any additional questions, me, Brian, and Max will be all chilling in the Discord chat, Sanbase Pro chat, after the call. So let's continue our conversation there. Any last words, guys, before we end it?
No, nothing on my end.
Any last words?
Any last words?
Yeah. No, good. Sorry, it's too much to share to Pogo.
Yeah.
But as I see from numbers, actually, almost everyone hang to the end, which is a good sign. So I assume it's interesting. And just to sum up, we strongly believe this is the way which combines both fundamental and technical analysis. We try to understand what is the impactful token holders are doing as an aggregate, and then as Dino showed, on a specific detailed level. And we will keep improving it. If you have suggestions, share with us. And yeah, and we can continue in our channel.
Yeah. Thanks, Max. All right, guys, that's going to do it for this webinar. We're planning on doing these sort of Sanbase Pro webinars every so often. So we've already done one on analyzing speculative activity, which whoever asked this question about exchange inflow areas. So we have a webinar. I can share a link to you for you in the Sanbase Pro channel. We've done a webinar specifically on exchange metrics and exchange-related metrics, and how kind of you can, evaluate speculative bias and general amount of sell-side pressure for a coin based on our metrics. So if you're interested in that, we've done another webinar maybe about 2 months back that I can share with you. And then this time, the main topic was whales and how you can track whale activity with our platform. Once, maybe 6 months ago, we've done a webinar on how you can utilize our social activity data, mainly social volume, social sentiment, and social trends, our three most popular metrics. So if you have a specific topic that you would like us to cover for another webinar that we might do in a couple of weeks, let us know so that we can start preparing, right? Write in the Discord chat what sort of topic you would like us to cover next time. So as you can see here, there's about 100 different metrics that we currently have on our platform. Some are looking at a specific group of holders like whales or exchanges or long-term holders. Others are more sort of esoteric, and they aren't necessarily looking at a group of stakeholders, but they're looking at a potential way to value a specific coin, whether it's MVRV or NVT. These are all sort of valuation methods using on-chain data. So if you maybe want to look into that a bit more for the next time, let us know. Either way, that's going to do it for us this time. Thanks a lot, and I'll talk to you all in the Discord chat.
Good stuff, guys. Thank you.
Thanks, guys.